Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be doing a Bitcoin roundup to discuss the current market conditions. We're going to try to gain some insight into Bitcoin's recent price action and how we should consider positioning ourselves going forward. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just here on the Bitcoin price live chart here on Look Into Bitcoin. And as we can see, the month of May has actually been a downwards month. Actually, depending on exchange, the first downwards month we've had in 2023, where we're down approximately 5%. So obviously not the best month, but realistically, down 5% in the world of crypto isn't too much to be too concerned about, especially considering at times we were down considerably more than we're at currently. Right now, as I film this, price is just beneath $28,000, but we have touched as low as $26,000 over the past few weeks. So ultimately, not the best month we've had, obviously, but realistically, things aren't too bad. Fear and greed index is looking pretty neutral, which, considering the recent price action, isn't too surprising. Obviously, a lot of equities and different commodities and stuff have been performing fairly neutral the past few weeks as well. So maybe Bitcoin has underperformed slightly, but again, nothing I'd really worry about too much. And ultimately, not the most exciting month of price action, let's be real. If we go into a few charts we can see here, such as the 200 weekly moving average, there are some good signs of the few past weeks that we really should be more positive about and a little bit more optimistic going forward, such as the 200 weekly moving average, which we've tested successfully on multiple occasions. Over the past few months, we said as we were beneath this, that really what we need to do to confirm we're actually in a bull market is break above this 200 weekly moving average and ideally come down and retest this line a number of times. It's all well and good if we break above, but until we actually come down, confirm this as new support, that we actually get some buy pressure coming in at this level at around $26,000, really that will confirm that there is more buy interest, more people are confident that the bull market has really begun. And we have done this, and we had a fairly nice positive rebound and reaction in price after we actually touched this line, which is obviously pretty optimistic news, even when we take into account that we are a little bit down this month. What we can also look at is the 1 year hodl wave, which if we look is actually continuing to make new all-time highs. Almost every time you can look at this chart, you'll see this continues to climb to the upside, which again, I would say is actually a pretty promising thing, especially if you look at in the previous transitionary parts of the cycles from bear cycle into bull cycle, when this climbed and really started to peak, we'll actually have a look at how price action continued following those periods. So here I've just squared on the chart where price action was when the actual 1 year hodl wave begun to peak. So if we just hide this, we can see in every single one of Bitcoin cycles, as we've come out of a bear cycle, have some sideways transitionary period as we go from bear cycle into a bull cycle. We can see this usually occurs once the actual 1 year hodl wave begins to peak. This really, again, signifies that a lot more positive price action is likely to follow. And it really does indicate that maybe we are kicking off the later, middle stages of a bull cycle. Obviously, we've had a over 50%, nearly 100% rebound in price, depending on where you look at Bitcoin's low to the peak we had a few weeks ago. So obviously that's nothing to, turn our noses up at. But realistically, if we look at this, in all of these single circumstances, Bitcoin had also made similar moves while the 1 year hodl wave begun to peak, and then really we had some exponential price movement to the upside. So another thing we really should be positive about, in spite of the more boring and slightly downwards price action we've had recently. Another thing that really solidifies the fact that we really haven't kicked off the bull cycle yet, and really there's no reason to be taking considerable profits at these levels, is the Bitcoin active addresses has actually decreased fairly substantially over the past few weeks. As we said, this is likely due to the lack of volatility we've had. Usually when price action's really boring, people just generally aren't too interested in being very involved in cryptocurrencies and Bitcoin, because a lot of retail come in to try and make some profit, trade the short time frames. And if price is really going sideways, 5% over the course of a month is really quite low volatility for Bitcoin and crypto. We can see this has had a notable impact on the active addresses, as it has dropped fairly substantially from over 1 million average weekly active addresses on the Bitcoin network to around 750,000. So about a 25% decrease, which is fairly substantial over a course of just a few weeks. We can see this is on a general uptrend throughout all of Bitcoin's life cycle, all of Bitcoin's price history. We obviously have these huge peaks to the upside when Bitcoin's price really starts to exponentially run up, and a lot of retail flood in to try and maximize their profits and usually get in a little bit too late anyway. But we can see as this has dipped down to pretty much the same levels we were after we had a pretty stark correction from over $60,000 to near $30,000 during the bull cycle in 2021. dropped to a pretty similar level to there before we actually rebounded. So again, this really is showing that right now there isn't too much interest in Bitcoin and cryptocurrencies, even after a near 100% increase from the lows we've set. And especially considering all the points we've already discussed, this really gives us some confidence that maybe there is so much more room for Bitcoin to grow to the upside. What we can look at as well is, like we said, the funding rate really solidify this fact that volatility has been very low. There's not too much interest. There's not a lot of action going on in the Bitcoin space right now. If we actually look at the funding rates, we can see they've been fairly neutral. Here I'm on the coin denominated funding rates. And if you weren't aware what the funding rates are, it's the premium you have to pay, the set interval funding to keep your derivative positions open. So usually futures contracts, for example. And if I just remove the Bitcoin's price for a second, I'd like to point out that this funding rate, not price action, but sort of data that we're seeing, really mimics periods we've seen in the past. If I just draw a box around the current data we're seeing in the funding rates, to me at least this looks fairly similar to these periods of funding rates we had just in the past few months, especially where we see this flip-flopping between negative and positive, meaning there's a lot of indecisiveness in the market. We're not necessarily seeing a majority of traders take big positions in either direction. We're really seeing a lot of indecisiveness. People change their bias, flip-flop whether they think price is going to increase or decrease. So this being reflected in the funding rates really does show that there's a lot of indecisiveness in the market right now. If we then add price back on, we can see in each of these rather flat, neutral, indecisive funding rate periods, it was well Bitcoin was going very much sideways again, just before we had a dip before the FTX insolvency and collapse to the new lows. And again, once we were actually at the lows before, we had a big rebound from around $16,000 to well over $20,000. Funding rates were doing a very similar thing as they are doing now. So maybe this is just a sign that we are going to have some upcoming volatility. But if we go to something like the Bitcoin open interest, which is very much tied to the funding rates, this is looking at the current open amount of derivative positions currently across most of crypto's largest exchanges. And as we can see, during these periods that we discussed before, where we had this huge increase in open interest, where funding rates were very indecisive, again, it was when we had this huge run up here before this large drop to the downside. And again, when we were already at the bottom, we saw a huge increase in open interest, once again, while funding rates were very neutral. So right now, we haven't seen a big increase in open interest. So it wouldn't surprise me, to be honest, if we have a few more weeks, maybe even month or so, of rather boring, sideways, neutral, no volatility price action. As traders really make up their minds, maybe we get some more retail interest slowly rolling back in to really signify that maybe we are going to have some fuel to take us higher. But like we said before, even if we are 100% off the lows and we're not seeing too much retail price action coming back in, ultimately that's a pretty good sign. Boring price action is better than terrible price action like we had for the bear market for well over a year. So really, this sideways consolidationary period really solidifies the fact that we probably are in this transition period and we're just kind of slowly grinding up to the upside before the bull market really kicks off. So just to summarize, even though May has been 2023's worst performing month for Bitcoin, things really don't look too bad. A decrease in active addresses indicates that majority of retail is still not interested in entering the crypto markets, meaning we're still likely in a very early bull market or transitionary period between bear and bull cycle. This is also reflected in the 200 weekly moving average being retested for the first time and the 1 year hodl waves continuing to climb. These are both signs that we're still in the very early stages of a bull market and likely have considerably more room to the upside. And what we can say is with neutral funding rates and a lack of volatility, many traders are still unsure on Bitcoin's next move, so keep an eye on the open interest increasing as a sign of an imminent period of volatility. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth news slides, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And as we conclude this May 2023 market roundup, it is a good thing to look at that we've actually been active on YouTube for exactly a year as I film this. So if you aren't already subscribed, please do. If you'd like to reach out, if you have any video ideas or anything like that, please just let me know in the comment section down below or on social media. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.